Hello guys, welcome to our YouTube channel Stocks for Everyone. I saw many people asking in comment section of other YouTube videos asking for what's wrong with Marksans Pharma share or what do we do with it or analysis of Marksans Pharma share. So I thought I'll come up with a video and in this video we'll look at the business overview of Marksans Pharma and also their Q1 FY26 financial highlights, and we'll also look at why their profits fell and what is the guidance or outlook that the management has given for the FY26 fiscal year, and also their strength, their cons, and their recent shareholding pattern, and also like what's the conclusion on this stock, right? So if you're new to this channel, then I would please request you to subscribe so that you won't miss analysis videos like this. And also I see that more than 99% of our viewers are non-subscribers, so I would request you to subscribe so that we'll also get some kind of motivation to come up with new videos like this, right? So with that, let's get started. But disclaimer guys, this video is only for educational purpose. We don't intend to give you any buy or sell recommendation. So please consult with your financial advisor before taking any investment decisions, right? So without any delay, let's get started. So if you look at Marksans Pharma, then they manufactures OTC and RX generics across pain, digestive, cough, cold, vitamins, dermatology and CNS segments. So mainly their business is segregated into two types. One is OTC and another one is RX. So when you say OTC, OTC is over the counter medicines that they prepare. So when you say what is over the counter, then these are the medicines that they sell without any prescription. So if you get any headache, then you go, you ask general like medical store, you ask them to give you any like headache tablet or cold fever, right? So these are OTC, and then RX is prescription. So when doctor prescribes something, then based on that prescription you buy something from your store or hospitals, right? So that's your RX, right? And if you look at OTC, so Marksans Pharma manufactures this OTC, and then it's being sold in private label. So basically this company manufactures some tablets, and these tablets are sold in for example DMart. So but the branding would be DMart's brand. Okay, so these are like this company would be like a contract manufacturer of these medicines for that particular seller or store. So you go to DMart, you buy it in DMart brand. If you go to Big Bazaar, you buy it in Big Bazaar brand. But this is manufactured by this company. If you look at their presence, so they're present in more than 50 countries. Then the key markets are US, UK, Europe, Australia, and New Zealand. And if you look at their plants, so they have four plants situated in Goa, UK, and US, and their capacity is around 26 billion unit capacity, and they have four R&D centers. So when you say 26 billion, it would be somewhere around 2,600 crores units. And then if you look at their FY25 revenue, it was around 2623 crores, which was having almost 79% from OTC private label sales. So you know that this is a big chunk of their revenue, right? And if we look at the recent financial performance, that is Q1 FY26, then if you look at the revenue stood at 620 crore, which was up 5% year on year, and gross margin was seen at 57.8%, and it was mainly because of cheaper raw materials that they could get. And EBITDA stood at 100 crores, which was down 5.6% year on year, and profit after tax was 58 crores, which was down 34.7% due to higher costs and forex loss. So what is forex loss? We'll come to that. And if you look at the cash stood at 711 crores, and the company remains debt free, right? So if you look at their Q1 FY26 performance, then you see that their profit was largely it, right? So this is one of the reasons like why company is going on a downtrend, and it's understandable, right? And if we look at why the profits fell, right? So profits was it because of one-off cost, that is one-time cost for the new Goa facility that they are coming up with, and 10.5 crore was credit loss, and 6.2 crores of market to market forex hit. So if you want to know what's credit loss, then credit loss is, for example, you have a customer, that customer should give you 10.5 crores, but then it's not like they have defaulted you, but you are assuming that it might not come to you, or it's delayed, right? Or you are assuming that it might not come to you. Then it's shown as credit loss, but it doesn't mean that they'll default you. They might come back and give you after many months or years. So for now, you are declaring it as loss. So that's credit loss. And then 6.2 crores of market to market forex hit. So this is like, for example, you're dealing with US, or like you are dealing with your Indian client, and then you want to get some number, for example 10 crores. Now US dollars is varying with respect to your Indian rupee rate. So if it's increasing, then your value of this 10 crores will also vary. So with that, because of this currency fluctuation, they have got this 6.2 crores of like value decrease. So they are attributing it to 6.2 crores of forex hit. So that's one thing. And then they also saw like very softer demand. Their operating leverage was reduced because of that. And there's also one more reason, that is your UK RX price erosion. So when you say what is the price erosion, so RX, I already explained you that this is your prescription medicines. Okay, so here the selling price of prescription drugs in the UK was dropped gradually due to intense like competition, and then there was some sort of rules and regulations from NHS. So because of that, their pricing add some pressure, and because of this they add this price erosion. So when you say what is price erosion in simple terms, for example, you're selling 100 quantities of some medicine at 10 rupees. Okay, now even if you sell 100 quantities of same medicine, because of some external factors, competition or anything, your price is has decreased to 9 rupees. So now even if you sell 100 quantities, then your value would decrease by 10%, right? Because previously you used to get around 1000 rupees for same 100 units sold, but now you would be getting 900 rupees, right? So this is called as price erosion, and this is, and because of this their revenue fell, and their profits, everything gradually got impacted, right? So this was with respect to their profits, or why their profits fell. And if you look at the guidance and outlook for FY26 that the management has given, then actually management had given 3000 crores of revenue, and now they are saying that they might not be able to achieve that. And then if you look at their US growth, then US growth is looking strong with $220 million of order book and new digestive and pain products that they are coming up with. And UK is looking very flat for them for this fiscal year. They are looking for a flattish growth, but they are launching some high margin products, and because of that, they might be able to cope up with the pricing pressure that they are facing in UK. And margins they have guided approximately to last year's, that is around 17%. And they are also doubling their capacity in this Goa expansion that they are undergoing. And then they are also exploring Germany and EU acquisitions to grow, right? And if you look at the latest shareholding pattern, that is June 2025, then promoters holding stood at 43.9%, which is unchanged, and FII holding stood at 19.9%, which is slightly lower than the previous quarters. But the investor counts increased to 159, and then DIA holding stood at 5.5%, and which is a bit up, and mutual funds stood at 3.55%. And if you look at the retail holding, then it stood at 30.7%, which is higher. If you look at the strengths of this company, then they are the top OTC private label supplier in US and UK, and they have this sticky multi-year contracts that they have with their clients, right? And they have the strong R&D pipeline with 100 plus products. They are also a cash-rich company, and they are also at debt-free position. That is good. And if you look at the risks that's involved with this company, then they have heavy dependency on US and UK markets, and which is contributing around 86% of their revenue from these two regions. And then UK prescription is having this price erosion, and also we have global tariff that everyone knows now, and also forex volatility. You know how the currencies are varying, right? And they also have these regulatory risks from US FDA, UK MHRA, and EU agencies. To conclude, Marksans is a financially strong company with steady OTC demand and long-term US contracts, but near-term earnings face some margin pressure, and UK pricing is having some headwinds, and then also one-time cost that they paid this time. These are all the factors that are causing the share price weakness. It's all your call, guys. So we have done the analysis of this, looking at what's the reason for the share price fall and also their commentary or the outlook that they are giving. And we also looked at strength and cons. So this is how the analysis should be. So if you find this video useful, then please hit that like button, share it with your friends, and please don't forget to subscribe, as 99% of our viewers are still non-subscribers. And this would really motivate us to come back with such more videos, right? So see you guys in the next one. Till then, thank you.